All right, everyone, welcome back to another episode of This Week in Charts via Carnivore Trades in Wall Street from Main Street. Starting off with the S&P 500, we can see we had a bullish pattern developing here up into this lower trend line of resistance on the previous wedge pattern that we've been following for quite some time. And we had the breakdown this week on Wednesday. This pattern failed. We closed below the green bar low, and the S&P trended lower for the better part of the week. If you remember to last week's video, I talked about the triple Qs here, the NASDAQ, failing this pattern at the end of last week on Friday. This candle here failed, as well as the semis. And I said, I was warning that we were going to see some downside this week, as the NASDAQ was telling the market, telling me that the market was weak, and that we would see this bleed over into the rest of the market, and that has happened. You see this failed pattern here on the semis. Also in tech, we've been talking about this IGV pattern, the lower highs. If we take a look on the weekly time frame, we had this nice inside bar consolidation sideways, and then a huge flush on cloud software this week. So tech has been weak, leading the market lower. Why is that? Well, of course, it is because of yields moving higher. The Fed is way behind the curve. Check out this failed bearish pattern here, bullish pattern here on Tesla. Look at this weekly. You have this nice bullish pattern. Came way off the lows, tried to break out, and closed back below that yellow band there. So a fake breakout there on Tesla. Some other stocks getting hit really hard. Look at Netflix here, just absolutely trounced here. Nice inside bar there on Netflix. Kind of looks like cloud software as well. This should have good support right in the 520 range, but all of tech across the board getting hit here. Even the FANG stocks are unable to stop the bleeding. Microsoft in a nice support, but coming way off the highs. Look at this on Google here, breaking a trend line. So that should get a bit of a bounce around the 200 moving average, but tech weak across the board. And, I've been talking about this for months. Yields were going to move higher, and they have started to do that. Let's take a look at the 10-year Treasury yield. Just absolutely pushing higher here, impulsive breakout move. And we have this trend line that we've been following going back really to 2019. And really a big inverse head and shoulder pattern here on the 10-year. Same thing on the 30-year. Less of an inverse head and shoulders, but nice trend line breakout nonetheless. And we talked, if you guys remember, a few weeks ago, I showed you this TLT pattern here on the weekly, and I said, hey, look at this. It started to break out, and then we closed back below. So we had a bull trap on TLT. So TLT will be headed lower, as that is a bond ETF. Also, another area we need to watch here is high yield. So high yield debt here via the HYG. If you lose this pivot here, it's holding up for now, but if we lose this pivot and it starts to head lower, that is going to freak the market out a little bit. So we're looking right around 85.48 there on the HYG, also LQD. So this pivot, obviously a major one here. It still has a little ways to go, but if these things start to break down, it is going to scare the market and going to cause problems. So I do continue to expect yields to push higher here in over the next couple of months, and that is going to continue to put pressure on tech, and ultimately it will put pressure on the market. Now, one area that has held up okay in the recent weeks here is financials, which makes sense, as the higher yield does help financial stocks, specifically money center banks and stuff like that. However, if the yield curve starts to flatten and goes inverted, it's going to take everything down, regardless of the sector. But the XLF actually holding up here, making a new high, new 52-week high. So that is the reason why the market hasn't completely, caved and sold off across the board yet. Although we have seen some selling. Broker dealers also getting a bit of a bid here. These banks tend to benefit a little bit less than the typical financial stocks from the higher yield, but they do benefit a little bit nonetheless here. KRE making 52-week highs, KBE, large bank ETF making new highs as well. So they are holding up, but again, we have to watch that yield curve. If that flattens out too much, everything will go down, and I do expect that to happen, by the way. XLE also a good an area that can benefit from a higher yield. Energy stocks. Take a look at Chevron here. Possibly, oops, there, wrong chart there. We're looking for a monthly. There we go. So if Chevron can close above this red bar high here on the monthly time frame, so meaning by the end of the month, and this is at There we go, 122.72. This will go right up to all-time highs and challenge that area. But I mean, still have a good amount of the month left. But you know, a lot of these energy stocks are looking much better, in much better shape here. XLE starting to push up here. This will have resistance at 64.65. You got the 100 and 200 MA there. Also some kind of pivots here. You'd be back testing, but XLE starting to get above this trend line that, you know, is going back a long time. Goes back to the GFC here. But so energy also holding up okay. And again, that is with higher yields. But if yields, you know, if the curve starts to flatten, it's going to take everything down. So there won't be anything safe. But anyways, let's move on here. Crude oil got up to that gap fill. I think it just tagged it barely. We have a high of 80.47, and the actual fill is 80.58. So basically filled it almost to the penny. But anyways, that's kind of your major resistance. If crude wants to advance, it's probably going to have to, you know, maybe pull back to that 75 handle. Maybe it just chops sideways, and then it can possibly test the 52-week high. But crude holding up really well. You know, I have to admit, it got a little bit higher than I thought it would, but it did do a little bit of backing and filling over the last week and a half. And so getting a little bit of bid here and filling that gap again. It probably needs to pull back. So if you were looking for a buy entry on a short-term basis, you probably want it in that 75 handle. And then, you know, if it makes a higher low there, then it can, you know, go up and possibly test that 85 handle, which would coincide with this red bar high here. But, you know, crude overall holding up pretty well here. Nat gas kind of just stuck in a range right now. I do expect one more leg down in nat gas. It is inside of this red candle here. The high of that is 396.6. So if you close above that, then maybe it can rally up to the 50 moving average. But if it breaks down, it's headed a little bit lower here. You do have kind of bearish chop here. So you have the sharp move down and then the sideways move there on nat gas. So not a strong pattern there on the weekly. So I do expect nat gas to head lower, but we do have a good buy level already set in place for that. Let's move on to the dollar. Not a whole lot going on in the dollar here. It did come down and test that 50 moving average on the daily. On the weekly, it's still holding up really well. I like the dollar here for a move much higher, possibly next week, but maybe, you know, in a week after that or so. But pretty soon, I do think the dollar gets going. Let's talk about gold here and the precious metals. Again, it's very hard to, not a lot, you know, again, not a lot to say. I think one of the videos Jason did the other day, you put it pretty plainly. It's if they're playing, it's like playing ping pong right now. You're just in this kind of wedge here. If we pull it back here, you can see we're just kind of just ping ponging through this wedge. There's a gold tug of war going on right now, and really not a lot to do with it here. If it breaks down, you're going to head down to probably the 1670 area, maybe 1700. If it goes higher, and we push through 1865, 1870, and we can confirm above that, it goes to all-time highs pretty fast, in my opinion. And you'll have a quick pit stop at, you know, 1950 or so. But that's really it on precious metals. They're just kind of range bound right now. Same thing with silver. Your support is about 21, 25. If you get through this high here at 25.50, you know, then we can talk about maybe up to 26.50. You know, this is where your next area would be. That would kind of coincide with this previous trend line. So those are kind of the areas there for silver. Platinum, I still think makes a move lower here, but in the near term, it does have a little bit of a bullish pattern here. So you have this big move up and then kind of sideways chop inside of this green bar. So platinum not, you know, looking terrible here for a move possible to the 1025 handle. Maybe 1050 if it really pushes higher, but that's just kind of the near-term look there on platinum. Palladium, there's just really nothing to do with it right now. It's just kind of all over the map. I wouldn't really personally touch it myself. Copper here, still holding this bullish pattern that we've been talking about. Really, I think I pointed this out last week. It did test the lows of this green bar on Thursday, but closed back above it on Friday. Again, resistance is 451. If you get through that near term, you're up to 464. If this breaks down, then it's going to go down here and test the, I think, 424, 425-ish area. Yeah, 425. That's where that would go if that breaks down. So let's look over here. So we did have a spike in, we'll just look over the uranium stocks here. We did have a little bit of a spike here on the Kazakhstan kind of turmoil going on. We did come back in pretty sharply. Again, with CCJ here, tried to break out above this red bar, but just wasn't ready yet. There was a bit of a panic. So sometimes you get a spike and then it comes back down. Again, we look on the URNM, it's kind of just hanging in here in this range. I'd have to say in the near term, it probably wants to go down and test 60. If it does that, that's going to be a really good buy area, at least for a swing trade. As far as a long-term trade, it could be a really good area to buy. But if you're looking at this from a 10 years, next decade type perspective, this might be a good area to add in. And then if it goes lower, it goes lower. But, the bear market in uranium is definitely over. So I think this is a good area to pick up on the URNM. And that should coincide with, on the URA, you're looking at that, be about the $20.50, $20 handle. Denison, that would be right around the 1.2, I think, 1.15 area. And on CCJ, I don't even know if CCJ gets quite down there, but that would be right in the $18 to $19 range there, for those of you who followed that. Let's talk about Bitcoin. So here's Bitcoin here. So Bitcoin did trigger a head and shoulder pattern. So see this shoulder, head, shoulder, neckline's right there. If it can close back above the neckline, it can negate it. And you probably go right up to 52,000 very fast. But I remember last week I warned you. I said that look at this bear flag here on Bitcoin. You had this bullish pattern here, pop sideways, nice bullish inside bar, and then boom, it broke down, closed below the low, and then he immediately started to put in a bear flag. So it's, I was saying, I don't like crypto here. I think it's headed lower, and that has been the case so far. If this breaks down and it can't hold 40,000, you'll have a pit stop at 35, 36, but I think ultimately it goes back down to 32 before a really meaningful bounce. But you can see the same thing across the board. Ethereum, rollover, bear flag, and then a breakdown. Doge, a little bit of a bear flag there. Litecoin, you see these bearish patterns here on every crypto here. Solana, right there, inside bar, move down, found the 200 moving average. So you get the point. But crypto kind of in a tough spot right now. I'm still not in love with it. I do think you'll get a very good bounce at about 32,000 there on Bitcoin. Anyways, just to recap everything, I am not in love with tech. I'm still not in love with tech. I've been saying for months that tech would be the weak link. Tech would top out first, and that has happened. And that has been because of yields, and I expect that to continue here. Now, we do have some areas that can hold up. We said financials, XLE. The Russell 2000 has a lot of financial and energy stocks in them. So the Russell 2000 might be able to hold up for a little bit longer. And the Dow Jones will be able to hold up as well, because the Dow has a lot of lower PE stocks and a lot of blue chip stocks that you would like to own in a risk off type of environment. But risk on stuff like the NASDAQ and these high flyer tech growth plays are not going to perform well over the next couple of months if yields continue higher. The Fed is way behind the curve. A lot of investors thought that on Friday, when we got the weak jobs number, the Fed would kind of renege on their rate hiking, and they haven't. Because they are so far behind that they really have to play catch up here. Inflation is getting out of control, and even the bogus CPI numbers can't hide it anymore. Anyways, guys, take care. Come join me on Patreon. Come join Jason on Patreon. I've got a new website coming up in February, but you can check that out, carnivoretrades.com. Leave the video a like, subscribe to Jason, subscribe to my YouTube, etc. Anyways, thank you guys for watching. Take care, and I will talk to you all next week.